Okay, folks, if we could settle down to start our next session. Thanks for coming in promptly. We have another session coming now, and we'd like to end at the promptly scheduled lunchtime of 12:15. And our two speakers, I should introduce myself. I'm Nigel Casimir I'm the telecommunications specialist at the Caribbean Telecommunications Union Secretariat in Port of Spain. So I'm CTU, taking over from my colleague, Mr. Wilson. And let me say again, we have no reserved seating in front here. And we will invite persons way in the back to come forward and be a little more engaged with the presentations the presentations and the speakers. Right? We have lots of space on this table up here, and you're quite invited to come forward and join us. The tables also gave us an opportunity to engage with one another, have some little discussions as the case might be. We mightn't have too much of that this morning, but please do come forward. Okay. We're going to start addressing in a little more detail now some of the key issues. We talked generally in the first session about challenges with mobile money and some of the trends and so on. And we'll hear from Mr. Gale again, but we'll give him a little rest for now. And we'll start with a local presenter, Mr. Roland Singh, who is the project coordinator for the National Payment System at the Bank of Guyana. And he's going to give us a presentation on Guyana's national payment system. So this is something that's in operation here that falls within our digital financial systems discussion this morning. So without further ado, please welcome Mr. Roland Singh from the Bank of Guyana.
Thank you very much, Mr. Casimir. Good morning, ladies and gentlemen. I've been very quiet at the back because Oliver and Anna has made it very clear that they have problems with the central banks. So I've been quiet. And after listening to Oliver and Diana, my presentation would appear to be from the times of Mesopotamia with the blockchain technology and so. But the good thing is that we have started to move from that time. And that's why I'm here. I am the project coordinator for the National Payment System. And I'm going to give you a background on what we're doing and what the central bank is doing to improve the payment system. Let's give you an overview. The thing is that before we understand where we're going, we need to know where we're at. So I'll give you an overview, a payment system, the present payment system landscape. Of course, central banks are all about, besides monetary policy, legal and regulatory and supervision of financial institutions. So I'm going to give you that. We're going to look at the headings of the payment system in structure as it stands right now, the problems with the security settlement system, the disadvantages. Then the nice part is that we're going to take you the way forward and the actions that we're taking and that will be taken by the Bank of Guyana. So basically the National Payment System Reform Project began in 2017. And our goal was to modernize the Guyana payment system. And it's partially funded by the World Bank. However, I must say that the payment system has three parts, the ACH, the RTGS, and CSD systems. But we, the central bank, had started the modernization of we had started with the modernization of the ACH system, and then subsequently, through the Ministry of Finance, we got funding from the World Bank for the two subsequent systems, the RTGS and CSD. So, of course, like everything else, the NPS will be designed to be compliant with internationally accepted standards for payments and security settlement systems. And of course, it's a collaborative one between the Bank of Guyana, the 6 commercial banks, the Guyana Revenue Authority, the Ministry of Finance, and the National Insurance Scheme. Now, why do we want to modernize the payment system? Simple. It's because the development of would support Guyana's efforts at economic growth and diversification through the financial sector that is stable and enables efficient financial intermediation. Now, at present, that is not, the system doesn't allow for that to really happen. So, this is what the present payment system landscape look like. Let's start with the legal and regulatory framework. The Bank of Guyana carries broad regulatory and supervisory responsibilities. That's what we do. We supervise the 6 commercial banks, and then we have the non-banks, which are finance companies, trust companies, merchant banks, stock brokerage. And then we have also the money transfer agencies, cambios, insurance companies, and the New Building Society. But what happens? Although we supervise them, there is a lack of legal clarity and certainty. Oversight, NPS oversight in Guyana is limited and diffused across several departments in Bank of Guyana. For instance, we have, and I will get to that a little later, we have the case of the National Check Clearing House facility, which is the only payment system presently in Guyana. And we don't have a formal arrangement or a structure to coordinate and implement oversight. We have various departments of the BOG conducting specific functions, such as the supervision of certain infrastructures or market segments. For example, the banking division conducts the oversight of the present payment system, the NCCH, while the bank supervision department conducts supervision of the commercial banks, the money transfer agencies, and cambios. So there's no cohesiveness, if I may use the word. And at present, we're working with the World Bank to correct that in terms of drafting a strategic oversight framework so that this will all fall into place. The other thing is that this is the legal and regulatory framework that obtains. We don't have too much things. While we have a bit of specific legal provisions for international remittance services, we don't have any statutory provisions on electronic transactions, including the electronic processing of checks and the use of truncated or electronic checks. We don't have provisions for credit transfers, either paper-based or electronic, or on electronic debit transfers. And we don't have secondary measures exist on cards, either debit cards or on e-money transactions. Apart from the specific provisions on international remittances, the law is silent on whether non-banks are allowed to offer payment services. and the provisions of domestic remittances and bill payment services by money transfer agencies fall completely outside the legal and regulatory framework, and thus outside the reach of BOG's oversight. As I said earlier, we own and operate the country's only interbank payment system infrastructure. That's the National Check Clearing House. Here, we would have representatives from the banks come to our office, special room, sit down, exchange checks, and then take these checks back, process them, and settlement is cleared by way of checks. At best, access to funds, we've now been able to do it at least, at best, 3 days. Sometimes it takes longer. How it is settled? The bank holds reserve accounts for these commercial banks. And these are used to hold their reserve requirements and surplus reserves, and to settle the NCCH net clearing position, honor interbank payment obligations, and make payments to the BOG. So right away we can see that that's a very inefficient process. It takes too long. Customers complain. To get around that, what we have is multiple corporate customers opening accounts at different banks, just so that when they get a check, they can deposit it and get the funds. If, for instance, if you have account, you open several accounts at different banks. If you're paid with a bank drawn and that, and you deposit it, you can get clearance right away. So that is how you go around that process. So what we had is that a lot of customers having several accounts at different banks just to get the funds faster. But even, as I said, even that in itself suffers from inefficiency. And this is related to the weaknesses in the legal and regulatory framework and the inability of the banks to conduct outright straight-through processing of interbank check transactions. So in other words, payments don't go through right away. Our 6 commercial banks are the main providers of payment services. They include check services, card-based payment services, unlimited direct deposit services, ATM and point-of-sale services, debit cards, and prepaid cards. Some also offer account access via internet and mobile phones. We also have some other payment providers would include the money transfer agencies, the post office, and Mobile Money Guyana, which is a mobile network operator wholly owned by the GT&T Guyana Telephone and Telegraph, our largest telecommunication firm in Guyana. And we have, the money transfer agencies offer international and domestic remittance services, bill payment services. Then we have the Guyana Post Office, which is a cash-based bill payment service, and it functions as an agent for encashment of social benefits. Institutions such as NBS, Hand in Hand Trust, and the other 28 active credit unions that we have, they offer deposit and credit products, but they are not permitted to offer domestic or international payment services because the law that they're governed by does not facilitate that. The credit unions conduct payment transactions, including those associated with deposit and credit products, via accounts they maintain at one or more of the commercial banks. So that is our present landscape, payment system landscape. Now, this is what happens. Available payment services are limited by, we have accessibility constraints. And what we have is that the number of ATM and POS devices are further constrained by the lack of interoperability across service providers. Each commercial bank issues its own card and operates its own ATM and point-of-sale service. While a few have moved and are co-branded with Visa, which offers some amount of interoperability across the networks, the rest are still operating as standalone institutions. This lack of robust infrastructure, right, that's one reason, the lack of robust infrastructure that support efficiency and facilitate remote transactions. The absence of efficient infrastructure impedes the ability of commercial banks to execute their clients' interbank payments efficiently, and this affects both public and private sector financial activity. So by not having interoperability across service providers, you're limiting your whole ATM and point-of-sale system to one specific bank. So what you have if you go into a supermarket, you have to have point-of-sale systems from each bank that offers it. Nobody really works with that. We know, if I may speak about the security settlement system, the Bank of Guyana plays a major role in government security transactions, with auctions being handled by the BOG. At present, we don't have any effective infrastructure to facilitate safe and efficient public and private sector securities transactions. The system we have at present cannot register changes in ownership of government securities or their use as collateral. As such, the secondary market in government securities is very thin and is done entirely over the counter. The securities market in Guyana is nascent and has been so for a while, and fund settlements are done through checks, resulting in risk and inefficiencies. GASI, the Guyana Association of Security Companies and Intermediaries, are the only institutions supporting the private sector securities market. However, all that happens is there's manual and paper-based processing is required at all post-trade stages. There is no centralized registry or depository to record the ownership of corporate stock. Changes in ownership requires the reissue of the security documents, and this results in considerable delays. The payment settlement period is set by the rules of GASI, but there's no set settlement period for the issue of new certificates of stock ownership. As such, the risk mitigating delivery versus payment is not achieved. And this results in limited development of the capital market in Guyana and the limited availability of long-term investment opportunities. Now, the present NPS poses a number of disadvantages. And I want to highlight some of them. For instance, the cost of conducting payments is higher than need be. It takes longer to settle transactions and the risks are higher. Manual processing is highly inefficient, costly, and risk-prone, and compromises public security. The operational credit and liquidity risks in the clearing and settlement of both large and low value payments are high. All of this leads to a slowdown in business. If it takes longer to settle transactions, it means that your access to funds for businesses takes a while, gets longer. There's also the increased risk of what we would say refer to draw checks, or you have bounce checks, as we know it better. And we all know what is happening now at present with the present when you withdraw large funds from banks. 99.9% of our payments are conducted with paper-based instruments at present in the form of cash, checks, or vouchers. A recent World Bank payment cost study revealed the following, and it's shocking statistics. For instance, the annual cost of paper-based payments for government agencies takes up 0.13% of GDP, or Guyana 850 million, or US 4.1 million. And the annual cost of cash for consumers is 2.45 of GDP, or 15 billion, or US 73 million. So this is further some more factors. Cash, 0.06 of GDP, at cost 224 transaction costs, checks 0.03, 120, paper voucher 550. Again, this would be cost of payments initiated for consumers. If you notice, paper-based credit transfer takes $322, a check $208, cash $139. And as we begin to go into electronic means, the value significantly decreases. For mobile money, it's 82, credit card 70, debit card 68, and if we're going to go to electronic credit transfer, that will be $51. If we look at some of the time factors, we often at times don't pay attention to the issue of the cost of time. But the above clearly highlights how much time is wasted, and in wasting this time, that is loss of production and loss of productivity. So adult Guyanese spend approximately 32 million minutes annually for trips and transactions associated with deposits and withdrawals, and approximately 474 million minutes annually for trips and transactions associated with the collection office for payment initiated and received. It was calculated that the 32 million minutes resulted in 132 opportunity costs, whilst the 474 million minutes annually for adult Guyanese translated into $1.8 billion. So we have a very, very inefficient payment system. So we recognize that, and what did we do? We recognize that it did not meet the economy and financial markets for efficient, safe, and sound means to conduct transactions and transfer funds. And in the FSAP of 2016, the Financial Sector Assessment Program, also highlighted this. So this is what the Bank of Guyana undertook. We've had technical and financial assistance from the World Bank, and we have done a comprehensive and strategic reform of the Guyana national payment system. We've started with legislative and regulatory reform, and then we're going to move to the modernization of the NPS, National Payment System. We've already crafted the enabling legislation and regulations that would bring legal clarity and provide the legal framework for the establishment, regulation, and oversight of the NPS. This began with the National Payment System Bill of 2018, which was tabled in Parliament on April 26 by the Honorable Minister of Finance. And we're also in the process of finalizing 4 regulations, one on agents, electronic money, electronic funds transfer, and oversight. In a nutshell, the agent regulation speaks to the appointment of agents by payment service providers to provide agent payment services. Briefly, the electronic money will lay down the rule for the pursuit and conduct of electronic money payment services. The electronic funds transfer applies to any electronic fund transfer service in Guyana, and oversight would apply to the licensing process and oversight of payment services operators operating wholly or partially in Guyana. So we're in the process of finalizing those legislative reform. Now we move to the technical aspect of it. The modernization of the NPS would involve electronic clearing of checks. We would have an automated clearinghouse, real-time gross settlement system, and a central securities depository system, the card switch. The electronic clearing of checks is at present undergoing. Bank of Guyana took that step, and what happens is that checks are scanned now front and back by the collecting bank, and the images are sent electronically to the BOG for settlement by the paying bank. So we don't have physical clearing of checks anymore at present. We send the images, and that is cleared, and that is accepted by the paying bank and settled. As I said before, we had started the automated clearinghouse, and this is expected to go live shortly. What this does, payments now, these are for small value, large volume transactions occurring regularly. Somebody can go into a bank, give an instruction, and once the bank verifies everything, it's sent to the Bank of Guyana, and Bank of Guyana takes the responsibility of settling it with the paying bank. Within 2 hours, once everything goes live, funds could become available. Some of the benefits are we have increased efficiency by enabling more active use of electronic payments, by introducing new instruments such as interbank direct credit and direct debit transfers. So with the ACH, we have the ability now to introduce new instruments, and in terms of wage payments, it enables the use of bulk payments for some large volume payment activities. Of course, it would increase the speed of clearing and settlement of payments. So access to funds becomes much more easier and quicker. The real-time gross settlement, the RTGS, is particularly for large value time critical payments, what we would call now special clearings. At present, special clearance values are 500,000 and over. So what happens is that immediately you make a payment, you go into your bank, you give instructions to make a payment, that goes through immediately. So you can have access to your funds for large value transactions right away. With the Central Securities Depository, that is for securities, government securities. It would allow electronic auction and registration of securities ownership. It will allow for efficient transfer resulting from future secondary market transactions. And by integrating the CSD and RTGS, the settlement process would conform to DVP. And it would permit the usage of eligible securities as collateral for liquidity needs in the RTGS system. At present, the commercial banks are still working with Visa to establish interoperability of the domestic card and the ATM point-of-sale network in the country. Once they have completed this process, domestic transactions using these co-branded cards will be processed via an overseas Visa card switch. And this would allow for you to be able to go to any ATM and access funds, whether that ATM is for your bank. Of course, go ahead. Oh, sorry. So, almost? All right. So these are some of the advantages of a modern NPS. It decreased theft and robbery and thereby increased public safety and security in Guyana. You have faster access to funds. You get security market transactions. You reduce overall transaction costs and expand the opportunities for commercial and financial transactions. And here it is, we have significant savings for Guyana. For instance, the government alone could save approximately US $2 million or 0.04% of GDP by switching to electronic payments. And if by substituting just 50% of their paper-based payments with electronic ones, savings to consumers could be close to $6.1 million US. This is our vision. We want to build a robust, safe, and sound, efficient, and inclusive NPS that meets the current and future needs of the economy, support financial activity and financial sector development, advances the use of electronic payments, contribute to financial risk mitigation, achieve compatibility with international systems, and adheres to the relevant standard guidelines and codes. So I'd like to thank you for your attention. Thank you.
Just in time. Thank you very much, Roland. Right on time, actually. As my timer went off, you thanked us for the attention. So you worked it out perfectly. We'll hold the questions for now and get the presentations done. Remember, we want to finish promptly at 12:15. I just would like to draw your attention to a sheet you should have collected at entry to the room, which is our evaluation sheet. And it would have feedback lines for all our presenters today. So please make sure you have one and return your feedback to us in terms of the presenters and presentations. It's valuable information for us to use to continuously improve the quality of the events that we put on. Okay, so we are moving on to the second presenter for this session, and again, we'll reintroduce Mr. Oliver Gale, co-founder of BIT in Barbados. And he's going to be talking now about banking for the unbanked and de-risking, and talking a bit about what BIT has been doing. So please welcome him back.
Thank you very much, everyone. Roland, I was really fascinated by your presentation because, well, yes, it's a little bit of a history lesson, but it's good to see the transition that the Bank of Guyana is making from these paper-based systems towards centralized systems, and really the problems and challenges and shortcomings which you highlighted so well when comparing the current system to the one you're implementing really doesn't change very much when you assess moving from a centralized ledger to a decentralized ledger. And I mean, I think my concern is that the technology which is now being implemented in Guyana is 15 to 20 years old. And so if that's a measure of the time it may take to implement distributed ledger technology, we may have to come back here in 2028, which is a travesty. It's a travesty for Guyana today to have to be dealing with the current systems that it has, and it's a great step in the right direction. So we're really moving in the same direction, looking at the same problems, just with a different technology lens on it. So I'm going to present more fully on and specifically on BIT and exactly the journey that we went through and our vision and what we're seeking to build. So developing world systemic financial problems, lengthy settlement times, lack of financial inclusion for unbanked citizens, restrictive barriers to e-commerce, high remittance costs, lack of banking infrastructure. We have no open gateways and open payment systems, fragmented currencies, and correspondent banking de-risking. So the list is very familiar, and the previous presentation went into some of the specifics. What does no open gateways and open payment standards mean? It means that you have to line up 6 ATMs alongside one another for each respective bank. And so what is the solution? Well, one solution is to outsource the interconnection to Visa and MasterCard and allow them to charge you economic rents to integrate the services. What we're proposing is to re-architect the financial system so that there is local integration and no external rents. When we talk about fragmented currencies, that's more of a regional issue. I talked earlier about the dependence that we have on using the US dollar for regional trade. That's the same thing. You're outsourcing your connection and to a third-party payment system, the US payment system, and you're being charged economic rents or premium fees to do business. All of this equates to friction, and when you aggregate the costs, it's in the hundreds of millions and billions of dollars, depending on whether you're looking nationally, regionally, or internationally. Cost of remittance in the Caribbean, international remittance, 8 to 13%. The estimated savings of the use of distributed ledger technology globally is a 95% cost saving on what is currently a $500 billion cost. And what is that cost? Well, that's the cost that Western Union or MoneyGram and other money transmitters charge as a premium to move money from point A to point B. But when we really assess what's happening, whether it's on the Mesopotamian tablets, a centralized database, a sheet of paper, or a distributed ledger, what you're doing is moving information from point A to point B, and there's no reason that anyone should be paying these type of costs to propagate electronic information from one party to another. And all of the costs that we face in our financial systems are the results of the risk of having to audit your counterparties, these controls, the central check clearing house, having to sit down in a room and exchange pieces of paper to determine who owes what. That is entirely a product of mistrust. If there was perfect trust between the parties, you would have no reconciliation requirements. You would have no switching requirements. And so we don't live in a world of perfect trust, but where we're evolving to is a set of databases that say we do trust, we do have to have trust, but not in one party A versus another party B. Let's split that trust up amongst an agreed upon set of people, and when that agreed upon set say that this is the state of a ledger, this is the state of a transaction, let it be so. Incidentally, fiat currency, fiat means let it be so in Latin. And so fiat currency is issued by the government because the government mandates that this is your money and we will back it. So our objectives are to promote financial inclusion by distributing the M-Money ecosystem, which is our mobile money platform, to financially empower each smartphone user with the ability to conduct seamless digital transactions, to provide each central bank with the infrastructure to issue a secure, transparent, and efficient digital fiat currency, to create a global settlement network for high-speed interbank transactions to facilitate and encourage global trade. So that's BIT's mission. Now, how do we get to that mission from where we started, which was two young men discovered Bitcoin, thought it was incredible, thought the technology was really cool, and we believe that every person, man, woman, and child in the Caribbean should have access to digital currencies and cryptocurrencies. We sat down and brainstormed hundreds of potential applications for blockchain technology. A lot of them were, you know, some of them were original ideas, and some of them were readily available by some of the thought leaders and pioneers who've been in the space of cypherpunks and electronic money, e-gold, BitGold. There are some real pioneers that predate Bitcoin's existence, and this libertarian grassroots movement has been covered by academics and some brilliant scientists, and we accessed that research and discovered that blockchain technology can really be applied to many different things. That was my journey of discovery. So in generation one, we set up a digital asset exchange. It was the Caribbean's first of its kind, and our objectives were to introduce this new company, Bit.com, to build a digital asset exchange to connect the Caribbean market, to allow consumers to use a push and pull matching engine to buy and sell digital assets for national currencies, and to empower consumers with the ability to move into and out of cryptocurrencies. So we faced the education challenge first of all. Every meeting and conference began with an introduction to Bitcoin and an introduction to blockchain technology. But the first question was always, have any of you heard of Bitcoin? And the answer was no. And then the next step was trying to bridge a divide between what is completely unconceived of and what is a technically difficult solution. Today, it's still a challenge, but it's eased significantly by the fact that you have regulators and international authorities and conferences and speakers and Netflix videos and such. There's so much increased awareness. It really has made the job of explaining the technology so much easier than addressing a room of people where you're the only one that's ever heard of this thing. So that was the biggest challenge. Encouraging digital adoption, we spoke about, you know, how do you engage with your consumers and understand their demands? So we faced the challenge of how do we build an interface? How do we serve our consumers? And there was no conduit between users and their money, in that, how do I access, if I want to buy Bitcoin, how do I as a Barbadian buy Bitcoin? Anyone who's selling Bitcoin typically is not selling it for Barbadian dollars, the same way that Trinidadians and Barbadians don't accept one another's currency very easily or at all on the streets. People internationally are not selling Bitcoin as believers in this replacement currency for Barbados' sovereign coin. So that was our first major challenge. We set up the infrastructure to have a matching engine, and then we didn't have a supply of Bitcoin. So we looked at that problem and said, listen, how can we bring digital assets into Barbados? And the answers that came to us were twofold. If Barbadians can sell their goods and services online for Bitcoin, that is one way of supplying Bitcoin and digital assets to Barbados. And another was, if we can reduce the cost of remittance and use Bitcoin instead of using US dollars as the intermediary between, say, or even from US dollars to Barbadian dollars going through the interchange of the bank and then paying the cash point, and the cost of cash is the last hurdle. If we can reduce that 8 to 13% fee by using a medium of transfer that doesn't charge you on the volume that you've transferred, it charges you for the data that you transfer, which is more appropriate because we are moving information. So if you move 5 cents of Bitcoin from A to B, or you move $50 million of Bitcoin from point A to B, the cost is the same. It really does not depend upon the transaction volume. It's the size of the information being transferred. So we set about creating our mobile wallet. So we wanted to provide consumers with an easy way to send and receive digital assets and to encourage adoption of the platform through the mobile market. We wanted to solve the last mile hurdle, because if I have to go from, say, Bitcoin to Barbadian dollars and still have to deal with cash at the end point, that's where all the cost in the remittance market is. So the idea was, let's build a mobile wallet and let the remittance end when it reaches your wallet. And the e-commerce was the other angle that we looked at. However, we were met by challenges. Limitations and management of physical cash is a problem. It's expensive. Local currencies were not fluid and do not interface well between consumers and the mobile wallet. Correspondent banking de-risking, and risks associated with digital currencies like Bitcoin created user uncertainty. What we mean by that is the volatility of the price of Bitcoin. You can't have somebody working for a paycheck, which they need to support their family, and it's worth $1,000 today and $800 tomorrow. It might be worth $1,200 too, but that's an unacceptable risk. You know, people that need financial inclusion and access are not in a position to be investing and speculating with their assets. They're living close to the breadline. What they need is certainty, reduction of the predictable costs of getting paid and spending money, and a vehicle for encouraging savings. Actually, it's been shown that mobile money solutions do encourage savings in the bottom half of the economic pyramid, because people are more aware of their balance. And so banking itself psychologically encourages, or having a balance that you can track encourages savings. Correspondent banking de-risking, funny story. We got a Series A investment for our mobile money ecosystem in 2016. The total round of investment was 16 million US of foreign direct investment. On a Friday, we released the press release saying Barbados has become has incubated the best funded technology company the Caribbean's ever seen, the first digital fiat currency the world has ever seen, and we have a publicly traded US company who's just invested this foreign direct investment into our economy. We're super excited to be making this milestone. The Minister of Finance was at our opening speech. That was Friday. Monday morning, Scotiabank called us up and said, we're closing your accounts. And so we said, well, why? He said, it's got nothing to do with the press release on Friday, but your accounts are being closed. So what that meant, I was CFO and president of BIT. So it meant that we had no check clearing, we had no banking solutions. Everything went to cash management. We bought cash counting machines, set up all the policies to manage cash, stored them in a big safe at the back of the office and in off-site locations. And I would regularly have to walk around with duffel bags and grocery bags with $150,000, $250,000 in cash. You know, this was, and it was a major problem. Now, I realized it was a huge problem, not just for us as a business from a cost perspective, from a scalability perspective. But when some of our team came up to me and said, I don't feel comfortable coming to work because there's this huge amount of cash on site and we don't have banking. And so, it was at, that point that we started taking pictures of all of this cash on the desk and sending it to some of our politicians and ministers and saying, this is what you want, this is how you support financial inclusion. We're here trying to take cash off the streets, and look what we have to do. You talk about technology and foreign direct investment, we can't even bring the dollars into the country. You talk about progress, we don't even have the technology of a check, right? And we had to do that for 2 years. So what that did, though, was it made us design a mobile money ecosystem which doesn't require a bank. So we digitized the Barbadian dollar. We created processes and procedures for central banks to issue digital dollars. We integrated the digital dollar into our mobile wallet, which was previously for Bitcoin and digital cryptocurrencies only. And we provided consumers with a product that allowed them to directly interface with their national currency. What that means is every merchant that accepts digital Barbadian dollars can also become a teller. Every merchant can become an agent that is a conduit for all of the KYC and AML checks to be done through our central compliance department. So today we have about 200 merchants and growing rapidly in Barbados. We launched in January of this year. We have about 10,000 users, and every merchant that accepts digital dollars as a payment can also be a cash in and cash out point. So we have some announcements coming up within the coming weeks of some major commercial players who are becoming tellers in our network. But what that means is that we have our footprint of ATM type cash in, cash out services is already double that of the commercial banks in Barbados, because there are only about 60 ATMs on island. We have double that in merchants. Each merchant can be a teller. So we built this self-scaling network that allows digitization of cash, which is taking the cash out of the system, creating efficiency, and allowing end users to spend that money in their domestic economy while focusing on a product that has a viral component to it in terms of referrals and organic growth. However, there's a problem, and the problem is that we still have to take custody of all of this cash and store it in banks and other cash-driven facilities, logistics of transferring cash around the network. So that problem is only solved with the participation of the regulators. There's no legislation or legal framework to support digital dollars, mobile money, or payment service providers. So at least here in Guyana, the Bank of Guyana is making some steps towards the mobile money and payment service providers. Barbados has yet to make those steps. What we've seen is that in some cases the legislation is helpful and broad enough in its scope that digital dollars issued on a blockchain fall within the definition, but in other cases the wording and jargon used really make it very difficult to actually introduce a digital fiat currency and embrace this type of innovation. This is why ourselves at BIT and Digicel, through Diana's representation, are saying lead with pilots, lead with sandboxes, figure out what works and what doesn't work before you start writing your laws, because it's a hit and miss. That's fine. So the shortfall, the other shortfall aside from the legislation was that an ecosystem to support a digital dollar at every layer of the money base was non-existent. So, this is what I just talked about, M-Money, which is introducing the software and creating the utility. Now, here's the beautiful thing about deploying interoperable mobile money in different islands or different territories. Domestically, you have all of your savings and advantages of lower cost. Look, it could not have been said better than it was said by Roland in relation to the costs and friction points of introducing electronic payment systems. All of those are eliminated. But once you start the things that are not eliminated in traditional payment systems are the trust, the interoperability, the reliance on central parties, the audit, the peer-to-peer accessibility. Those things are not solved by centralized databases. They are solved by distributed ledgers. When you roll out mobile money on a common protocol, where the difference between the application and the protocol is multiple applications can be written on the protocol. There is a protocol that our email clients use to transfer messages between Gmail and Apple Mail and Yahoo Mail, etc. Yahoo, Gmail, Apple Mail are the applications that are built on the protocol. So when you build mobile money on a blockchain protocol, you can replicate that in different territories with entirely different operators and companies, and you can allow money to be sent using this seamless interoperable protocol of value transfer. And so when Barbados's mobile money is deployed, and the Eastern Caribbean's mobile money is deployed, and Guyana's mobile money is deployed, each one of these citizens can now engage in financial transactions with one another in a very secure and auditable, low-cost way without having to go from one siloed institution to some switch which charges you a premium back down to another siloed institution without having to do the reconciliation and all of the inefficient audit and that sort of thing between the parties. So by deploying M-Money in different territories, we are sewing the region together. And the beautiful thing with distributed ledger technologies, and I haven't touched on it very much, is that the money is programmable, which means that you can take what is very simply a transactional layer at its base that says move money from point A to point B, or move money from Alice to Bob, Charlie, and Doug in a bulk payment. You can actually build trade financing contracts and advanced contracts on top of this base layer. So you can build decentralized exchange engines. You can build multilateral clearing facility contracts. You can build credit instruments. You can do so many. You can program the money almost in any way you want and enshrine in code how you want financial instruments to interact with each other, which is really, if you look at what's happening in the cryptocurrency space today and all of these ICOs which have raised more money than venture capital in the last year and a half, which is billions, over $10 billion. It's this type of innovation which is proliferating, and it's this type of innovation which allows for a lower cost, more transparent and secure payment system to be built. So if we look at the financial ecosystem, we broke it down into 3 notional layers. Layer 1 is issuance. That's governed by the central bank. You want a platform and solution for monetary authorities to issue digital assets securely onto a blockchain. Layer 2 is the integration layer. Financial service providers, commercial banks. Their job is integration of digital dollars and blockchain technology into the legacy banking architecture. And layer 3 is the interface, which is consumers and merchants. The ability to send, receive, and process digital dollars to and from smartphones and mobile devices. So the way this stack is broken down for BIT is we have our central bank issuance management system at the first layer, which provides real-time analytics and the ability to issue digital fiat currency. At the integration layer, you have effectively a service that you can then provide your financial operations management system, your compliance management system, your reporting, which comes with all of your reporting, your analytics, your transaction monitoring, etc. And then you have your mobile merchant teller ecosystem, which can be deployed by different financial institutions, each one of them able to do transactions with the other. And at the base layer, layer 2 and layer 3 are not necessarily codependent. You can deploy a mobile money ecosystem without having to integrate into third-party financial institutions. In parallel to that, we have, or off to one side, we have the underlying infrastructure. So at its base, you're using distributed ledger technology. That is this shared database which ensures that, it's a triple ledger entry accounting system. You're ensuring that when money is sent from Alice to Bob, that it is not reversed, that it's not spent twice, that it's not created out of thin air. On that foundation, you then stabilize the value by going back to the central issuer, which is the central bank, allowing the central bank to issue a fiat currency, which is not backed by the technology, it is backed by their gilts and their bonds, and effectively the infrastructure of the government and the nation that's issuing the currency. That's what gives fiat its stability. By issuing fiat onto a blockchain, you inherit all of these wonderful characteristics of the distributed ledger itself, reducing your costs and increasing interoperability. So our objective, we're in now generation 5 of BIT, and our objective is to build a central bank digital fiat currency platform. So we want to build a secure, scalable, fault-tolerant central bank digital fiat currency platform for the issuance and management of a national payment system. We want to build a synthetic monetary union through the use of a national blockchain-based digital dollar. Integration with leading distributed ledger technology protocols for digital fiat currency to create an auditable, accountable, and upgradable digital fiat currency, to establish real-time immutable audit and analytical tools, to facilitate government to consumer as well as traditional government to bank payments, and to empower people. So our mission is not to make one bet on which distributed ledger technology is going to win above all else. The notes which were printed in 1960 were not the same ones in circulation in 1990, were not the same ones in circulation in 2000, are not the same ones in circulation today. Why? Because every time you print a new note or issue a new coin, there is the possibility of someone with a better printing technology forging that note. And so there's this race which constantly happens between the fabrics and the fraud proofs that you put on your notes and the printing press technology. We look at the electronic payment infrastructure, which is built on distributed ledgers, and acknowledge that what is here today is not the end of the evolutionary chain. And so our job is to build an infrastructure that allows you to issue a digital dollar today on Bitcoin, tomorrow to migrate that onto Hyperledger, the next day or the next year to migrate it onto whatever comes next, because there is an evolution which is ongoing, and we're not placing bets on any one technology. Our job at BIT is to enable central banks to issue, manage, and upgrade their digital fiat currency to meet the needs of the time, as opposed to stagnating in any one place. So where do we go from here? Pending the establishment of a monetary union in the community, recommend arrangements for the free convertibility of the currencies of the member states on a reciprocal basis. Article 14 from the revised Treaty of Chaguaramas. That has been on our agenda for decades at this point in time, and we are still doing very little about it. We need to unify behind our goals of creating a single market in the Caribbean, of integrating and allowing our cultures and people who are so very similar, no matter which island or land mass you go to, we are very much one people. We need to work on integrating our economies, because together we are forced to be reckoned with globally. Independently, we are a collection of islands. So, thank you.
So both our presenters finished perfectly on time. And that leaves us with some time to ask some questions. So we'll open up the floor to questions now, but I will ask the first one because I have the mic at present. And ask Roland, in your presentation you mentioned at the points of sale, you might have multiple point of sale terminals from different banks. Is there I don't know, a bankers association or something that's working on integrating this thing, or they see it as an item of competition among themselves?
There is a bankers association. As I had said in the slide, there's a card switch. So they're working on that. But the thing is that the point of sales so far has had little buy-in from the public. I've heard of a case where you have the point of sale machine on a grocery counter, and the person left, and people are going and taking money from an ATM to come back to pay for it, and they're not utilizing the point of sales. So at this point in time, the efficiency of the point of sale machine is greatly reduced. A bit of both. Sometimes it's not working, and we're still 99.9% skewed towards cash payments. So it's going to take a lot of education, a change in people's perception to move towards electronic means. And that's why, as I started off with Oliver's already at blockchain, and we're now moving to electronic payments.
Well, you are saying so, but Montserrat was mentioned this morning in terms of looking at cryptocurrency and that sort of thing. And Montserrat has a similar issue in terms of acceptance of debit card payments and points of sale and so on. So they are having an initiative driven by the government and their central bank right now to leapfrog or cheetah, what was it we got yesterday? Cheetah pool all the technology into something further. So one need not necessarily take it step by step, but if we could get, I don't know, well, from our experience around the Caribbean, it's not the commercial banks driving this thing, but somebody else probably needs to seize an opportunity to maybe try and move the Caribbean forward. So let me open up to questions, please. We have Mr. Gale and Mr. Singh here to answer your questions, and we have the mics around the room. Formulate. You have one? All right. We'll take one.
All right. I was extremely inspired by that presentation, Roland, because the way you described it described practically every country in the Caribbean. I think Oliver, sort of sanctioned that as well. And it's important for all of us to see, just see where we are. The truth is, this is a very important test case because the crossroads that Guyana is at the same crossroads that many of us are at, but you're a little bit, you're closer to the Haiti model than you are to the others. And maybe we should all be looking at that assessment, that the details of the assessment. Can you hear me now? Okay. Perhaps we should all be looking at the the assessment that you put out for as part of the National Payments Council, because not every country, very few countries have actually done assessments. And so directionally, the information is quite relevant. In addition to that, my instincts tell me that with the characteristics that exist in Guyana, where only about 20% of the population actually have bank accounts, but with, I now understand, 90% mobile penetration, the leapfrogging that we keep talking about is poised in Guyana, as opposed to trying to fix a broken system. Fundamentally, you have a prime opportunity, as we all do in the Caribbean with this test case, to be able to leapfrog the rest, as Haiti has done in their own way, simply because at the end of the day, the metrics, the number of ATMs per per 100,000 in the population, the number of physical banks in Guyana is so far below that it just begs that we change the model. And so I encourage you to take that assessment and break it up, as per Oliver's point, look at it absolutely entirely different. And if I have to, I just want to end by saying that His Excellency's presentation yesterday was spot on. What we're talking about here is a geographic inequality situation in Guyana. And with that, we cannot try to fix the model by using the same model that, that didn't work for 150 years. And this room is all about engineering a model using ICT. And I think Guyana, with that, just the population, 50% rural, and the land mass alone being the, per capita, the lowest in the Caribbean, that we should really be using Guyana as a perfect test case to re-engineer from the ground up a financial system that makes sense and that is promoting inclusive growth, as opposed to just trying to enable a system that is already half working, if at all.
Thank you very much. There's just a point to note is that in Guyana, access to financial services are robust in terms of bank account ownership. We have about 73% of the population with debit cards. But the end use, moving on to use these cards, they're only just to get cash. They don't have any infrastructure, proper infrastructure that you could use to actually conduct electronic payments. And as my presentation showed, the whole landscape, electronic landscape, is very fractured. You have some doing this, some doing that. Some of the banks are offering online payments. Some are just offering ATMs. Some are not offering even ATMs. One is not offering ATMs at all. So it's strictly cash. And this is the problem. So we do have a high level of persons with debit cards. And the other thing too is that because of we don't have interoperability among the ATMs, we only have approximately about 21 ATMs and 159 point-of-sale devices for every 100,000 adults. If we had interoperability, that would have gone up, because one ATM could have serviced 6 banks, rather than you have to go and invest in putting 6 ATMs in the area. So that's our problem.
Well, the banks have to cooperate for that to happen.
Can customers of one bank use the ATM of another bank? to withdraw cash, even to withdraw cash, or to
if they're Visa co-branded, and the banks are doing that right now. I don't know how long it's going to take, and of course, they're going to have to work out the costs and so.
And once you introduce Visa in your local transaction, you're introducing fees. Yes, go ahead.
Good morning, good afternoon to you. Interesting presentation, Ronald. I just want to find out, where does Guyana stand as it relates to electronic banking payment data? Could you give me a standing point as to whether we stand at 126, we stand at 1/3, we stand at 150? Where do we stand in terms of number ratio as it relates to the services provided by the internet banking system?
I don't think I can give you that. I really don't know. I think in terms of internet, let me see, 1, 2, 3, maybe about 4 banks offer some form of internet access. But it's very restrictive to maybe transfers between same accounts, check balances, at least you can pay bills. But I don't know where we stand in terms of what some international study. No, I don't know. Well, the first thing that comes to mind is bad. But I can't give you an exact number. But we have a lot of catching up to do, and we have recognized it, and we have started with assistance, both technical and financial assistance from the World Bank. We are presently moving towards that. But the way technology is going, by the time we reach there, we're slated to complete in 2021. By the time we reach there, we might have to now go, blockchain will become very established, and we might now find that we have to go that way. So, but it's a process, and we're at least making attempts to move forward. Good point, but central banks are, well, at least the bank again is very, very careful, and I think some of the problems Oliver faced, he would also face them at Bank again. But it's not that we haven't looked at it. We have. But it's just that right now we don't know how feasible it would be. Because we have point of sales and people are not using it. I know when I was at a commercial bank, when we started ATM, when the first bank brought out an ATM, there was a lot of skepticism. And now it's a service you can't do without. So we need to change perception. I think blockchain technology and Bitcoin is good, beneficial, but you need to look at the population. You need to educate the population, because for many out there, blockchain technology may not be understandable. For them, for people, cash is very simple. You can go in there, you can take it out, and that sort of thing. But for blockchain, it takes an understanding of how it works. And some people are very skeptical and scared of using new technology. So it's a mind shift you have to encourage. And electronic payments even now would require a great amount of education. But the thing is that we have to go there.
Yes, a ways to go. We'll have to leave it there, folks. So we'll have an opportunity this afternoon to discuss some actionable points going forward. And let me just say that given that we know we have a high interest activity this afternoon, we want to try to bring forward our discussion so that we don't lose people as the afternoon goes on. So we'll break for lunch now. And we'll ask that could we try to reconvene for 12:45 p.m., where we'll hear from some local innovators with respect to financial services. And then after that, we'll have the discussion about actionable points going forward. Just before I let you go, we'd like to again recognize our sponsors, our premium sponsor, Digicel, and our other sponsors, Crimson Logic, the Latin American and Caribbean Internet Registry, LACNIC, the American Registry for Internet Numbers, ARIN, the Internet Society, and RSC International, who will be quite involved with our youth fair on Friday. I'll remind you again, please, to fill out your evaluation forms that you should have received when you came in, and ask, the lunch is downstairs, see if you could have it quickly, and see if we can reconvene at 12:45 p.m. Thank you. Oh, I forgot. Let's thank our speakers, please, Mr. Oliver Gale and Mr. Roland Singh.